Alrighty guys, so first thing I want to show you here, if you go to the front page of CNBC here today, right? Howdy there folks, welcome into today's video. Stocks, oh man, that was a rough one out there. That was a rough one today, okay? I want to talk about all the devastation that happened out in the market here today. I want to talk about why this is going on. We're going to kind of get into this Wall Street playing a little games, let's call it that, and then we'll kind of go from there. And also, thank you FTX for sponsoring today's video, my official crypto partner. If you want to check out FTX, check out pinned comment, tell you a little bit more about them later on in the video. So first off here, looking at, I have a watch list that's retail trader investor stocks, all right? And, you know, whatever you use for, whether it's a desktop application like this or whether it's Hungry Bowl on your app or whatever, I always think it's cool to add these sorts of stocks, even if you don't own any of these stocks, because what you're going to find is usually when one of these stocks is moving down, the whole dang group is moving down. And so you look at a day like today, right? You had GME down 10%, GameStop. You had AMC down 9% there, right? The two brothers in arms. You had Space, Virgin Galactic, which, wow, Virgin Galactic, I didn't even realize it was under $10. This was a very, very hyped stock a few years ago. So if you go back to early, kind of around mid-2021, it was 55 plus a share. It was also went crazy back in February of that year, about 54. And then this was its first actual hype cycle, which was prior to Rona. Went all the way up to 33. And then obviously Rona happened and that stock just, kind of got just slammed, okay? And so that's a space-related company, right? Yeah, well, it was kind of like that's just a tough business, and whenever I've talked about that one before, it's in a really, really tough space, and the reason being is because it's dealing with space, okay? I mean, the amount of money you have to try to spend, and then, if they can ever get to profitability, who knows when the heck that is. That's something I try to explain, to folks for years and years. You look at a stock like Skills here today, down 8.4% there. That one's a $3 stock now. Coin, 7.5% down. Wish stock down 7.2% here today. DraftKings down 6.6%. All these are popular retail stocks. SoFi down 6.6%. Fubo TV, which is in the 6 range, which is pretty interesting actually for Fubo because they got a really, really nice growth. That's a $6 stock here, down 6%, right? Teladoc got hammered. Seeing Teladoc down like that makes me think ARK's down. Oh yeah, sure enough, ARK's down 5.7%. C3 AI down big. HIM's down about 6%. The Hood down 5.7%. And then ARK, an ETF, obviously, Cathie Wood's ETF there, the main one, down 5.7%. You had Clove down 5.2%. Palantir down over 5% here today. Tesla Maesla down 4.7% here today. The Chef down 3.3%. Okay, the Chef did, I guess, better than most of the retail stocks, but still a rough one for the Chef. And Real down 2.9%. So those are most of the heavy retail stocks. All right, just absolute devastation out there here today. Right now, if we pull up my stocks I'm watching but don't own yet watch list. A lot of devastation out there too, not quite as bad, but you look at a lot of these stocks I'm watching that I might potentially own in the future, like a SoFi down 6.6%, Square down 6% here today, Purple down 5.5%. That one's back to flirting with the fives again. Cruisy Doozy, I've owned this one in the past, I don't own it right now, down 4.8% there. Stitch Fix down 4.7%, Lemonade down 4.4%, MU's under 75 now. And just a lot of stocks got hit today. In a stock like Amazon down 2.5%. So RH freakishly was up 7% today. I don't know, it was just like maybe a little dead cat bounce there. Travel stocks here today. It's going to be a hot travel summer. That's all I got to say about that. Uber down 4%. Hawaiian Airlines down 3.5%. Wynn down 3.3%. Airbnb down 3%. So, obviously just a lot of stocks just getting hammered across the board. And then we look at big tech here. You're going to notice some pretty damaging things. NVIDIA seems to, whenever the market's moving down huge or up huge, it's moving with the market and pretty heavily. Down 5% here today. Obviously, we talked about Tesla. PayPal down 3.4%. AMD down 3.3%. Shopify down 3.3%. Meta was the one that held up decent today, down 0.8%, right? So in terms of this, if we look at the indexes here today, right? Obviously, the NASDAQ down 2.2%. Anytime the NASDAQ's down like that, it's going to pull down all of these sorts of stocks. Like if you tell me, from what I've been seeing, like you tell me the NASDAQ's down 2%, I'm going to say, well, Russell's probably down 2% as well. And what we're finding is that that generally tends to be true. And sure enough, 2.2%, Russell down 2.3%, and then that sends a ton of stocks down, essentially, 5%, 7%, 9%, okay? And I want to show you a few things now. So let's shout out FTX here, and then let's jump into a few other things I want to show you. So last week I let you guys know that FTX US is now the official partner of me, Jeremy Lefebvre, and I am super thrilled about that. FTX is the best crypto exchange in the world with no fixed fees. But this week I actually want to tell you about Sam. Sam's the one that founded FTX. His story is inspiring, and I think he's setting a great example for many future crypto millionaires and billionaires. Here today, I was just reading this on Bloomberg, an insane story about Sam, okay? He's the founder of FTX. 5 years ago, Bankman-Fried, that's Sam, okay? He was working for a charitable organization that promoted the then fringe idea of effective altruism, using scientific reasoning to figure out how to do the most good for the most people. Then he spotted a seemingly too good to be true pricing mistake in Bitcoin and decided for him this would be the right path to making tons of money and give it away. Now Bankman-Fried is one of the richest people in the world with a fortune of more than $20 billion. Think about how this man's life has changed in just a short amount of time. Think about this now, okay? He is now spending time with folks like Steph Curry, with people like Katy Perry, Leonardo DiCaprio. The biggest of the biggest politicians want to have meetings with him, hear from him. And this man has decided to stay true to his roots and give away 99% of his fortune, which is something I honestly think is a phenomenal thing. And I think most billionaires and folks that get ultra rich, I think that's the best decision you can make, right? It's one thing if you make a few $100,000 and you have that to your kids to inherit, or your grandchildren or something like that. But when you have billions and billions of dollars, the right move to make is to give that back to society and not just allow your entire family line to just ride around on yachts all day. That doesn't give them a purpose in life. And I think what Sam's deciding there is a huge thing. And I think there's going to be a lot of people that get very, very rich in crypto. And I think Sam's decision with giving away his fortune over time, I think that's a great decision. That'll be a great example for other folks that become billionaires because of the crypto space, which is something that's obviously happening. So I appreciate his story. I appreciate the perspective he's coming from. And I'm a proud partner of FTX. So if you want to check out FTX, go ahead and check out the pinned comment down there. When you use my referral code, HolySmokas, you get a free coin when you trade your first $10 of crypto. So check that out below. And thank you, FTX, for sponsoring today's video. As always, back to the content. Alrighty, guys. So first thing I want to show you here, if you go to the front page of CNBC here today, right? NASDAQ drops 2% as investors fear Fed hikes will slow the economy. Okay, nothing has happened there as far as Fed rate hikes that no one doesn't already expect, right? We all knew about this yesterday. We knew about the day before. And this is why I tell folks, a lot of times people want to see a day like today where a lot of stocks got absolutely devastated. The market's down 2+%. And a lot of people are and we're going to cover this in just a moment. A lot of people are looking at this and they're saying, oh, you want to try to pin it on something, right? Sometimes you can't pin these moves on something. It's just Wall Street's doing what Wall Street wants to do. And if they all want to cash on the same day, they're all going to cash on the same day. And if they want to get the algorithms going a certain way, they'll get the algorithms going a certain way. You can't pin it on this or pin it on that because there's no earth-shaking news today. There was no wow, can you believe this happened today? There was nothing like that. But yet, you just saw how many stocks are down 3%, 5%, 7%, 9% today. There's a massive list of those stocks. And, there's probably trillions of dollars were lost in market cap between all the different stocks here today. But it has nothing to do with that. That's just a thing to kind of, I guess you can say to kind of, point it on, okay? Now, 30-year just crossed 5%. I think this is a bigger deal, and the thing is with this, I don't know if this is slowing anytime soon. The average rate on the popular 30-year fixed mortgage just crossed 5%, now standing at 5.02% according to Mortgage News Daily. This is the first time it's crossed that threshold since 2011. Mortgage rates going up and up and up, guys. This is definitely a worry for the housing market. And I've been talking quite a bit about real estate on the channel recently. I have, and the reason being is, and I'm looking at your mortgage rates continue to go up and up and up and up and up, right? And the more these mortgage rates go up, obviously that's going to end up slowing the housing market. There's no debating that. There's no doubting that, right? I always give it to an example. Like, let's say the mortgage rate doubled tomorrow, right, to 10%. Housing would dry up immediately, unless it's like a super rich person or something like that has way too much money. Like, housing would be dead overnight, essentially. So the more the mortgage rates continue to go up, right, the more of a situation we get in where folks are going to just be priced out of the market, right? Because prices are already extremely expensive. Then you add on mortgage rates going up on top of that, and a lot of folks just can't afford that next property, right? Which puts a situation out there where the rich get richer in that sort of situation, as always happens, because obviously if you're somebody that's very, very, very wealthy, you have cash, right? You could just buy a house cash. You don't even need a 30-year if you don't want a 30-year. But most folks are not in that situation. So if you're talking about the health of the housing market, you have to have homes that people can afford. And the more mortgage rates go up, right, every 1 percentage point up, you could do the math on that and what that changes a $500,000 mortgage for, a $400,000 mortgage for, a $600,000 mortgage for, which is what most people live in. Most people live in homes that are anywhere between $350,000 and about $600,000, right? And obviously those numbers can change depending upon the market, but that's where most folks live. And so if you talk about mortgage rates going up, then folks that are looking to buy homes, it's not very, very attractive, right? Which then ends up likely leading housing to come down, right? Leads the home builders to start to have their sales start to dry up slowly but surely, right? Where folks are just, they're not as let me go buy a new house, because one, prices are extremely elevated, and two, mortgage rates going up. That's not a good thing, right? So that starts to happen. Then you can start getting more competition, I would say, in for folks that are looking for a home, because if you don't have as many people coming to look at your home, right, well, then you're in a situation where, you need to start dropping price, right? Let's say there's 5 homes for sale in a neighborhood, right? 5 homes for sale in a neighborhood. Somebody's coming to look at those homes. Well, if there's not a lot of bids going, then other folks are going to say, man, I'm trying to sell this house. So what do? Drop price. What's the real estate agent say? Hey, we're going to need to drop price. And so you start having a drop price situation, which then actually would be a more favorable market for folks that are looking to buy homes, right? Which is a huge, huge issue, not just for the economy, but this is a huge issue for folks that are in office right now, especially with midterms coming around, with how much rents have skyrocketed up, with the way mortgages have just, ballooned if you're trying to buy a new home, that is, between mortgage rates and how expensive properties have gotten. That's a situation that is catastrophic to folks that are in office. Now, I take a little bit of issue with this here. Key people from the Fed just spooked the markets. Here's what they said. Fed Governor Brainard at San Francisco, Fed President Mary Daly spoke Tuesday, emphasizing the central bank's commitment to fighting inflation through higher interest rates. They said, quote, "It is paramount importance to get inflation down. Raising rates is what is necessary to ensure that, again, you go to bed at night and you're not worried about whether prices will be higher, considerably higher tomorrow," okay? So I take a little issue with this this notion that magically inflation is fixed by raising interest rates, right? Obviously, with something we just talked about like housing, that can be very, very true. If you just skyrocket interest rates and mortgage rates skyrocket, obviously it's going to hurt the housing market. So that's true when it comes to housing, 100%, right? Which is a big deal. It can also be true with something like, let's say, buying a car, because if interest rates are much more expensive, people aren't as likely to buy cars. So it can hurt a market like the car market, the automobile market, okay? Now, when you dig a layer deeper than that, does the price of a tomato, is that really affected by interest rates? In my opinion, not at all, okay? Gas prices, not very affected by interest rates at all. Gas prices can be very dictated on supply and demand, right? And in that sort of situation, with the whole, look at the Russia example, right? With the Russia-Ukraine situation there. If interest rates were magically 2 times higher, they wouldn't magically have fixed the Russia-Ukraine situation. It would have been like, gas prices never went up. Now oil never went up. No, if you get some sort of situation like that, that's what happens, right? If all of a sudden the Saudis announce they're going to cut oil production, it doesn't matter what the interest rate is. Oil's going to go up on that news, right? And so you have all these different situations that play out. There's a lot that obviously goes into the inflation calculations and inflation in general, right? And just because you raise interest rates does not mean that magically everything is fixed in the world, right? Also, it is important to remember that if the Fed wants to get very, very aggressive with raising interest rates, there always is the flip side, which is, do you want to set the economy into recession? Which is, and you get a whole other scenario, right? Now, let's imagine the Fed goes crazy with raising interest rates and they actually send the entire economy into recession. Let's just say that happens hypothetically, right? Well, then you're in a really, really bad situation. And the reason being is we just printed our way out of this last situation from a couple years ago in a massive, massive way, right? If all of a sudden we were to end up in an actual, if they raised rates so much and they ended up putting the economy into an actual recession, right? Guess what they're going to have to do again? Print like crazy again, then you're going to get into this inflation cycle again, right? Or you're going to be in a situation where unemployment rate's at, let's say, 10% or something like that. No one wants that. No one wants a 10% interest rate, and especially on the political side, no one wants that. There's a lot of pressure they would be getting if the Fed sent us into literally recession. We're not built like that nowadays in the United States of America. Many, many years ago, it was a different situation, but we're not built for that, to accept that sort of short-term pain. We're not willing. There's no way you could tell the American people, hey, the Fed's going to raise rates like crazy, send the entire economy into a recession for the next 3 years. You're going to probably lose your job, or somebody you know is probably going to lose their job, right? And there's going to be a lot of economic hardship out there. I think most folks would say, no, I'm okay with that. Let's not do that, okay? And they're like, I'll deal with these elevated prices. I think that's a better outcome than not having a job or be on government food stamps or something like that, right? And so when you think about this for a moment, you know, the Fed's kind of walking a tightrope here, right? Where they really need to not push things too far to one side, because if they push too far, they could end up sending the whole economy into a recession in that scenario. That's just, you know, I think Jay Powell and the folks that are running the Fed are more intelligent than that. Let's hope. I think there's ways you can bring the housing market down through interest rates, but if they think that's going to magically fix everything inflation-wise, if they want to just go crazy with the interest rates, then you set up the entire economy for a potential recession, and a major one, and that'd just be a whole other ugly scenario, and the Fed would need to come to the rescue again, but then all of a sudden print money like crazy again, okay? And so they need to definitely kind of watch themselves. But at the end of the day, I think a lot of this is just Wall Street playing games, doing whatever they want to do. If they want to send the whole market down for a given moment, they're going to do that. They'll blame it on whatever they want to blame it on, because there's always something you could pull out of thin air every single day that, let's send the market down for this. And it's like, do these companies really deserve to go down 4%, 8%, 6%, things like that? Usually no, but that's just the way it works. And then if all of a sudden there's a little excitement in the market tomorrow, those stocks can go up 4, 6, 8%. And whatever the NASDAQ is, a lot of these stocks are doubling up, tripling up, quadrupling up on the upside and the downside, whatever is happening there. And that's just kind of the market we're living in right now. So yeah, hope you guys enjoyed today's video. As always, don't forget to smash. I appreciate you guys joining me. Also, make sure you check out FTX, the official crypto partner of me, and use my referral code there, HolySmokas. All right. And basically, when you trade $10 with crypto, you get a free coin, which is pretty darn awesome. You never know what free coin you get. Much love as always, and have a great day.